fabulous angel investor with the Angel Fund. She's a co-founder of the Angel Fund with Julie Chin, who was at the Investors Social last night. And they've done some fabulous things investing in women. So I'm going to let you talk a bit more about your background, if that's okay.
Absolutely.
Thank you.
Absolutely. Well, speaking of imperfection, I think the title of my presentation is a little bit in contrast to what I'm going to start out by talking about, which is why angel investing, and my slogan really should be just don't do it, because if you really think about the amount of energy, time, money that you need to allocate to angel investing, it really doesn't make a whole lot of sense for very many people. And so the only real reason to do angel investing is because you can't help yourself, and because you just have a passion for entrepreneurship. So it's, you know, there's obviously a lot of really great reasons to do angel investing, and most of it relates to the fact that you have incredibly amazing entrepreneurs come and presenting to you where they've thought really deeply about a topic and, you know, sort of massaged it for probably at least a year by the time they come and present to you. And so it's really about that constant learning and you know, of course, the energy of it. The other thing that really drives a lot of the angels that I know is that they feel like it's their way of giving back to the community after they've done well, they've exited some company, and they feel like they can have a big value add. So my group of angel investors, which we call the Angel Fund, it's not a fund, it's actually a network of women angels, and all of them, when we're doing our screening and talking about companies, particularly in a deep dive with a company, one of their main criteria is what particular value add do I have as an investor? How can I make this company more successful? And if they don't feel they have that, they're not interested in putting their personal money into it. So a lot of it is around that, adding your secret sauce. And then you can come up with all sorts of other reasons, but note that most of these reasons are in some way altruistic, and they're not what the main reason people talk about investing is, which is the high potential returns. That's the primary metric and should be really the only reason why people do angel investing, but the reality is that should probably be more like your 10th reason for doing it, because unless you're a really particular kind of person, like say Peter Thiel or Reid Hoffman, you know, it's a probability thing. What's the likelihood that you yourself are going to get those great returns? It's hard to say, and so part of what I want to talk about is how can you increase your likelihood of getting strong returns. So more about those cons. As all of you probably know, 90% of companies fail, and so a lot of people consider their angel investing money as their kind of mad money. If from an asset allocation point of view, you really shouldn't put more than 3 to 10% of your assets into angel investing. And if you're talking about $25,000 to $100,000 per deal and you want real diversification, you're talking about a really large amount of money. And you know, and if you think about this, has everybody heard of Y Combinator? Okay, so Y Combinator has several hundred companies. And how many companies in that portfolio have provided its return? Does anybody know? It's 2. There's 2 companies over those several hundred that have provided all of their return. Everything else is a rounding error, literally. So it's Dropbox and Airbnb. So from your perspective as an individual investor, how do you get to that level of diversification where you get this big return? I mean, so it's just about being realistic. So, and then the other thing is, like, when you think about your personal time, I put the number 4,000 here, and does anybody have an idea of what that 4,000 number is? Okay, so if you're running an angel group, there's a woman named Carol Sands who runs a group called the Angel Forum. It's one of the older angel groups in the Valley. Her group screens 4,000 deals a year, right? So if you think about that from the point of view of if you spent a half hour reviewing each of these plans, that's a full-time job just screening, right? Who's got that kind of time? So, you know, you also have to think about the opportunity cost of your time when you think about your returns on angel investing. So presumably, you know, anybody that's in this game can make a lot of money with that time. So, and again, the bottom line here, and so that's just like your screening, then there's your due diligence and your structuring and monitoring, and then, you know, getting your money out, which is also a really, you know, not a trivial challenge. So again, the risk return on your time and cash is poor for most people. I guess I was really focused on this. We've got a little bit more on these challenging returns. Okay, so as we know, 90% of the time, company goes bust. There's other ways you can lose your money or not get it back for a really long time. One is like the company does well or it survives, but your cash is just stuck in there for ages, right? And so, you know, if you're looking at the present value of your investment, if you don't get that money, if you don't see that money back for 15 years, you know, your return probably isn't going to be that great in the end. But then there's another really important consideration, which is that if a company has a lot of capital requirements and they have to go into Series A, you know, lots of venture capital, raise a ton of money, you know, the angel investor, even though they were absolutely smart and right about an idea, about the team, about all those aspects, size of opportunity, they can still get crushed, literally get a zero, even if when the company succeeds. I took a class, I took Carol Sand's class at Stanford a year and a half ago, which is a fabulous class. It's called Angel Investing for the Serious Investor. And I assume most of you are not local. Does anybody live in the Bay Area? Oh, wow, okay, great. Well, so she teaches that class at Stanford once a year, you know, so I would definitely consider taking that class. It's really, it's in continuing ed, and she's really fantastic, and she'll go into a great deal of depth about essentially, you know, the getting into an investment, but also like how do you get out of an investment. And she did give an example of some company that they had invested in that was like technology around flat screen TVs. They killed it, did really well. And in the end, they still didn't make any money on that because when they had to raise that last round of venture capital, all the angels were out. And that doesn't, you know, it doesn't seem very fair, but if the company is either going to go bust or raise that next round, they're going to raise that next round and say goodbye to the angels. And there's things one can do in your legal structuring that can try to prevent that, but the fact is, if a company's not capital efficient, it's tough to make money. So another thing that Carol talked about in her class was that essentially if a company has to raise $40 million or more, they have to have Google-like returns for the angel to see any return. So, you know, you want to invest in companies as an angel that need less than 40 million to get their exit. And then the less probable outcome, what everybody's actually seeking, we're going to seep into some positive side, is like they're looking for that 10x return. On average, there's a study that's by the Angel Capital Association that angels in 2007 got a 27% average return. The data on this stuff is really spotty. That's hard to measure. I mean, you know, we hear about these great successes, but you have no idea what the bottom of that pyramid looks like in terms of all these things that didn't go anywhere. So one way to get a better outcome is to join an angel group. And the reason is just the efficiency of being with a bunch of other people that are focused on the same goals and having learning from others and you know, banding together in a group to go through all these different processes. And so there's a lot of angel groups in the Bay Area with different focus in terms of their types of members and the types of deals they focus on. And so it's worth getting to know the different groups like Sandhill Angels, Band of Angels, the Angel Forum. The Angel Forum actually meets once a week for like 48 weeks of the year. So they're an all-day, super intense. That's probably the most intense version. Those people are obviously in the group are mostly retired. It's hard to take off a full day every week if you're still working. And then the more typical model is meeting once a month and having a few companies pitch to you, and then those that are interested do the due diligence and the deal structuring, et cetera, together as a team. And there are some specialty groups, like there's Life Science Angels. There's a group that's called Golden Seeds, which is a group of women angels that's in a few cities, including the Bay Area. My group is all women investors, but we see both, both men and women-led companies pitch to us. And our focus is on technology, which most of these groups are technology focused. In terms of level of traction for us, our sweet spot is that they've got at least some level of traction with paying clients, so they've really come to show that they can meet a market need. Okay, so if you're going it alone, how do you generate deal flow? A lot of it can be just your network. Simply listing that on your LinkedIn will start getting you deals, trust me. There's also online sources like AngelList. At the end, I'll say something about the crowdfunding stuff, which is coming on board. So there's another company called Funders Club, and there'll be more that joins them that are actually angel deals. Then there's angel groups, and there's also a strategy around like going to the accelerators like 500 Startups or Y Combinator to their demo days, because that's in a way a substitute for an angel group. It's like it's organized, it's like it's efficient. You go, you see pitches all day, and then maybe even somebody else in the audience, and you can team up and invest together. So basic criteria to take a meeting. For us, it's, do they have a working product? Do they have a clear ability to fill a market need, as defined by paying customers? Is it a scalable idea, and obviously not a lifestyle business where you're really truly doomed to never getting your money out? And does it have a clear exit strategy? Like I said before, for us, we really focus on, is it going to be capital efficient? Because, to have to get Google-like returns to win is obviously a long shot. And another thing we really focus on is, will the current amount that they're raising get them to milestones that are realistic, that they could interest the next stage of financing? Could they get that A round, that Series A round? And sometimes we've had people pitch and say, oh well, this money will get me to 5,000 users, and no VC is going to be interested in a company that's only got 5,000 users. So it's like, do they really understand? Do those milestones connect with the next legitimate or likely funding? Obviously, is it a fundable team? Do you believe in the management? Do you also believe that they can work together? We really like to see the co-founders or the main, the key people in a room together. Do they seem like they understand and have a shared vision? And do they have clear roles and clear belief in each other, basically? So this is a big topic that you hear angels talking about, is whether they're coachable. We had this conversation at a panel a few weeks ago. And that can mean a lot of things to people. For me, coachable means are they open-minded? It's not can you persuade them of something, it's just like, are they open-minded? Are they strategic about you as their investors? Are they looking at investors as just money, or are they looking at them as potentially helping them able to be more successful? So it's like, do they have enough flexibility? Because obviously a lot of companies make a pivot at some point, and if they're not coachable, then they're not looking for the possibility that they have to pivot. So there's a lot of different opinions about what that word coachable means, but you see people talking about this quite a bit. Oh, and then another one is the value add. People, the women in my group, really want to know that they can help this company succeed. And if they're not adding any additional value, that's not interesting to them. So, how much time do I have?
Just over 5 minutes.
Okay. So due diligence, this is another really time-consuming aspect of investing. But you want to do background checks on the key people and talk to your network. And again, this is another reason why it's important to have multiple group people looking at it, is like someone in our network knows most of these people. And so we can get a conversation with people that know the CEO, the CTO, et cetera. So it's really important to to have conversations with their advisors or with their board members or people that know the key players. Another thing is talking to the clients and seeing if how enthusiastic they are about this product. There's nothing that beats really getting that perspective. We like to have a site visit to see what the energy in the room looks like. How focused are people? Another big one is is whatever they're doing protectable? And then there's checklists that you can pull off the web from like Tech Coast Angels and the Angel Capital Association. So there's a lot of great resources online that you can go at. I'm going to kind of breeze through valuation and deal terms. We as a group at so far mostly are joining other fundings, and so sometimes when we are looking at deals, those terms and the deal terms are already set. Crowdfunding. This is just a topic I'm really fascinated with. And has anybody ever been on any of the crowdfunding sites?
I did a campaign.
You do?
Yeah.
Wait, from which one?
From Indiegogo.
Oh, right.
After I interviewed Danae.
Oh, cool. Yeah.
Yeah.
Well, so with the reform of the Jobs Act, it actually will be possible at some point in the future for people to make investments. I mean, right now there's the Kickstarter and the Indiegogo, which is more like giving money to something as opposed to having an equity investment. But even today, Funders Club, and I think Angel List is also trying to get into this. You can go on to this website, Funders Club, and invest in an equity, make an equity investment in a company. And the way they do that, and this is just for accredited investors, is that they essentially create a fund, and that has up to 95 investors. And so you can invest anywhere from I think $2,500 on up, and then you pay a $300 legal fee, and that $300 legal fee covers the legal cost of forming that fund and the accounting and reporting for the lifetime of that fund. So even today, you can make equity investments online. And so the question becomes does it really matter to have the value add? Like if you're really not meeting the team or meeting the CEO, how are you making your judgments? How are you adding value? And does that really matter? I mean, I think most people think that it really matters. And but with crowdfunding, equity crowdfunding, this could change a lot. I mean, I think it's both really exciting and also really scary from the point of view of people really starting to take on investing like a lottery. And then also, Indiegogo, I think, is the leader in going after the non-accredited investors. And so when the Jobs Act is fully implemented, non-accredits are also going to be able to invest.
Also, the co-founder, I don't know if you
yeah.
saw, there was two gals there who were the co-founders. I interviewed them.
Yeah.
But they went bust just before the Jobs Act came through. But they were doing the equity based.
I think that ProFounder was allowing people to invest in the revenue stream, but I don't know that they had gone for the equity. But maybe so. I'm not sure.
Yeah, no.
And I wonder if they'll rise again. With.
I'm still trying to get another interview.
Right.
To find out.
Because I do think that there'll be tons of companies that try to enter this field, because there's a lot of money that can flood into this area with both the Jobs Act change and just innovations like what Funders Club does, which is basically creating funds that allows you to invest. So, nobody was doing that until just the past several months.
And so how is the crowdfunding model affecting the traditional angel model for you guys?
Well, I would say it hasn't yet affected it, and I think it's a really interesting question as to what it does. That remains to be seen. But it depends on whether you think the value add of investors matters.
Yeah.
And whether people are making good decisions or not. So clearly it adds more dollars to the ecosystem. And so does it lead to a lot more marginal ideas crowding the space? Does it, I'm definitely curious as to what other people think about what the impact will be, but I think we're not going to know about that for at least another couple of years, because it'll take a while for these things to meet their market. But I think the appetite's going to be huge.
Yeah, of course. Because a lot of people will just race for the money, not really thinking about the other piece, which is so valuable. So another angel said to me that basically being an angel, you're paying startups to help them.
Essentially.
Would you agree with that?
Yeah.
Okay.
Yeah, in a way, because, many would argue that your time is worth more than the cash that you put in. And so, and I can see that. Just in terms of the advice and the introductions and the different things that, I've done for my investments, yeah.
So personally, what would you say is the quality that made you want to be an angel, if that they are the odds, that they're not very good, and as far as making money, and that you're basically paying someone else to help them with their startup? What do you think is the thing that's prompted you?
Well, for me personally, it combines my two favorite things, which is ideas and people. So,
okay.
That's my personal addiction.
Thank you.
And so, of course you get attracted to it before you're really clear on how bad it is. And before, you start losing money, then when that really smarts. But it definitely is because it's really amazing to be sharing in the energy of people who've focused so intensely on solving a problem.
Very exciting.
Yeah, it is really exciting, and you learn a lot, and you can definitely be really helpful.
Thank you.
I think, John, you had a question?
So you talked about the value of joining an angel group. How do the angel groups decide who they let join?
That's a good question. I think it's true that it's definitely not all comers, right? So it's and every group is going to have its own criteria. I think it's probably mostly like referral based, and that's an interesting question. I don't know how.
It is a good question, because angelists have had a lot of problems with angels purportedly being angels, but aren't really doing any investment, or don't have that necessary wealth to be able to.
And so what have they done? They've just.
Well, I know Bryce Roberts from OATV actually got off angel list a year or two ago because of this problem. There
Oh,
was a
right,
few
yeah.
problems, yeah. I don't know whether they've monitored that again now better. But it's a a lot of people like the glory of just saying I'm an angel.
Right. It's like the realtors,
Wings,
the realtors of the 1990s.
Yeah,
Everyone's an angel now.
Maybe it's trendy, I don't know.
Yeah, definitely.
But yeah, you'd want to have some sort of filter system, wouldn't you?
I presume they do. I mean,
Yeah.
think about Carol Sam's group. Is it she decides? Is it net worth? Is it, clarity? If you're going to spend a day a week with someone,
Yeah, no, I imagine they have.
clarity about who they are.
Yeah, I'm sure they have some sort of significant screening, but I don't think that they have a whole lot of turnover. That's a very specific type of person that wants to spend that much time doing it. But I think they stay for a long time too, which I assume means they're making good money.
I want to ask another question, but I don't want to hog the floor. Has anyone got any questions for Marya at all?
The 40 million capital efficiency, is that referring to a seed round and then Series A through D, so all the money they're ever going to raise is 40 million?
Yeah, all the money they'll ever raise. So Carol talked about this in her class, that I think that they worked with, like a mathematician or something, and worked out, what happens over all those stages. And, even to get to 30, if a company needs to raise $30 million, they really have to have spectacular returns for the angel not to be basically shut out of it. So, I think a safer thing is, probably stop topping out at 20, 25
So
as a goal.
That leads you to focus on specific industries that are more capital efficient.
Right.
Software versus instead of life sciences, for example.
Absolutely. That, no question. I mean, and that's another piece of it is, is do you, as an investor, have money reserved for follow-on investments so you can actually even try to sustain your equity position? But again, if, when you're getting into those higher numbers, it's almost impossible to, unless you've got really, really more like VC level funds to invest. And the other, I think I probably mentioned it, but another way to go is to invest through some of these funds, like 500 Startups has a fund, and who else has the funds that you could go through? Sometimes these small funds pop up around, like Y Combinator, where people pool some money together and then spread their bets. Yeah. In the green?
We're coming from Eastern Europe, and we've been thinking about creating an angel club. We actually work for a startup accelerator, but we find it extremely important to have an angel club that will do the following, investment after our accelerator. So we've been thinking about forming this angel club, and wanted to know what kind of resources do we need to commit to form such angel club. Keeping in mind that the main goal would be to funnel old money into the economy, money that people made steel making, oil, gas, whatever, into the new economy. And also keep in mind this is an opportunity for these people to make old money. So what kind of resources do we need to commit to form such angel club?
Well, let me just say that what's more typical in the Valley is for people who are closer than old industry to the types of investments that they're making. So one of the things about my group is that it's people in the current generation of technology, and so they really understand what's going on. So some of the people in my group, like for example, were at Google and have exited Google, or they're entrepreneurs or they're VCs. Actually, Christine Heron, for example, who was a speaker yesterday, is in the group. So to the extent that you can, it would be great if you had some people with more experience. No, that's not possible.
Not
Okay.
the reality in Europe yet. I'm sure it will be, maybe in
Yeah.
5-10 years, but not our current reality.
That's a really interesting challenge. I mean, it seems to me then that if you could, you'd want to have people with incentives that you know, have worked in software and, you know, newer technology, just to be advisors or to somehow be motivated and connected to it, because I do think that those are really different industries, and you know, part of what makes you successful, I suppose this is also an area where government might take a role if you really have such a big gap. You know, do other people have thoughts about that?
What is a follow-on question related to that? Do you think there's an appetite from Silicon Valley or some of the angel groups to do sister angel groups, both to one, see deal flow from another country, but also to share their expertise with angel groups in other countries?
I do think that that's possible. I mean, people tend to, some people have geography constraints around the types of investments that they want to do. So my group actually mostly wants to see groups that are in the Bay Area. You know, we'd consider some exceptions, but there are, you know, if you're under the model that you want to have impact and help these companies with your connections and your ideas and your advice, it's easier if they're local, right? Because, like, I don't know that many engineers or, you know, executives in Eastern Europe. Like, I can't help them as much, or probably hardly at all. But I do think that the sister city thing would have some appeal. Because, and let me just say, I'll go there and then you, John, after that. But I think it's certainly likely that people would have that interest because, again, people that are in this area are likely in it because they just, the love of it, the love of the game. And so I can talk to you more about that afterwards. And you had your hand up earlier.
Yes, so we are fully great, and actually all our companies are interested in moving to the Bay Area, and they're interested to attract your attention, so we can have them here, not there. We do have all money, but what we don't have is like the smart money that they call, and with all the connections here.
Right.
At the very beginning, they start developing their product for American market, not Ukrainian market, so they don't actually care about all the connections in Ukraine.
Got it.
So give me one advice or a few advices. How do we attract your attention? So you start considering teams which are there for now, but are willing to relocate.
They're willing to relocate.
Yes.
Oh, I think we
At
need
least
to.
for some time. At least for some
Yeah.
time. As long as it's needed to develop, to start developing serious business here.
Yeah.
At some point, they will understand that the American CEO is more appropriate, and they will be happy to move back to Ukraine.
Right.
Unite with their families. But
Well,
they are very open to this idea of moving to Bay Area.
well, hopefully we'll get some immigration reform in the next couple of years, make that a little easier. But it's certainly possible that people are going to be more interested if at least, you know, the senior team is more local. And, you know, I don't think people care about necessarily where all the engineers are. I mean, obviously there's, people prefer to have the team all together in one place, but there's actually a woman in my group who's from Northern Europe. She's actually interested in investing in Northern Europe. So I mean, there's ways in which I think capitalizing on the backgrounds of some of the individuals would help speed that process along, where there's that natural kind of comfort and familiarity.
May I fill in here?
Yeah.
I'm from Estonia, and I think we are in a pretty similar situation, but actually you need a presence here, and that's what actually the government can do. And I'm representing our Estonian technology agency office here, and I'm really trying to put Estonian startups on the radar screen of the investors here.
Yeah, that makes sense.
And that is what actually all the Northern European countries are doing: Finland, Sweden, to have our own network of Silicon Valley. So these things help.
Can I make a suggestion? Is it possible to have like a layer of mentor advisors who may not be investing money, but are willing to work with the startups to, you know, progress them on and then shoot for the money?
We do have that.
Okay. Because I'm sure people here, there's a lot of talent in the Bay Area, many areas that could help startups, and you could access that, and that can happen virtually, thanks to Skype from Estonia.
And actually on angel networks and global networks, I think Keiretsu Forum is a good example. They have different chapters in different parts of the world.
Keiretsu. Yeah, Keiretsu's huge. They have like 860 angels.
This is like a so-called sister chapter.
But one of the problems with all these countries is you create silos. You don't collaborate together.
Yeah.
So it's better to create something together and contribute to this and leverage bigger network than, you know, for example, you spend here 2 years, you build your small network. They're gonna start from scratch, they're gonna build small network. So it's important for you to collaborate and leverage each own connections.
Yeah.
But actually, as I mentioned, the Silicon Vikings network, this is actually a so-called collaboration
Right.
between all that
Yeah.
Molly countries.
Yeah, but it's still silo.
Part of the problem, though, and I know a Boston VC said to me, who used to be in Europe, now he's in Boston, he said that really it's a lot, the problem is to do with the language, different languages. So every startup, if they're in a European country, they form the startup for that area, and of course then to try and even expand into the rest of Europe, there's challenges. So that's why we've seen so many cloned copies of.
Yeah. You know, John, as a CIO, like, you know, that oftentimes there's not enough technology talent. I mean, like, what's your view about having teams in Europe to be the technologists?
Yeah, I think large companies are pretty comfortable with it. So
Yeah.
our own business, we have multiple teams in India, teams in Mexico, multiple locations in the US. And when I sort of hear about their issue, I think it's not, they don't really need angel investing, they need VC investing. They need a professional investing environment where
Yeah.
they've created enough infrastructure that there are people that serve sort of that venture investing slice where they know the local market, they know the people, they're being paid a salary, it's their full-time job.
Yeah.
And then they're going to build the relationships here, and you know they'll partner with other firms here where they say, okay, we're going to do an A round, and then we'll show you our best A rounds. You'll partner with us, they'll participate. But I don't think an angel investing structure is actually what you need.
Yeah.
Particularly if you have old money and government money.
Yeah.
Just
We don't
build
have
money.
government money now.
Okay, but even old money, I mean, that's a classic place where someone says, hey, I came out of big manufacturing, I'm worth hundreds of millions of dollars, I'm gonna take $5 million, I'm gonna start a VC firm with, you know, 2 or 3 professionals in it. We're gonna go look at these angel investors, we're gonna travel to the US 5 times a year, we're gonna do all these things. The challenge with an angel structure is basically the people doing the professional investing are all volunteers.
Right.
And I don't think that's the structure that what you're describing calls for.
Yeah.
You can still make smaller investments. Like, you can still say you want to do, you know, $100,000, $200,000. That's a lot of money in the local market. But when you lack the infrastructure the way you described it, I think you need people who are being paid to create
Right.
that structure.
Thank you, John. That's
Yeah,
I couldn't agree more. And what comes to mind as you were talking is Dave McClure and 500 Startups.
Right.
And so Dave has a fund, and he has other partners and principals that are paid staff, and they actually are starting to migrate to the countries. I think they are doing more investing in China. But in any case, if you had a fund there that had, you know, people with the Silicon Valley experience to do similar things, that's probably a way to fill, you know, kind of fill in the ecosystem more broadly. Because, you know, it is hard as an angel to, you know, consider these vast global concerns. You know, it's a fairly localized.
So really, we need to educate more Europeans to become VCs. to create VC firms.
So
Yeah.
this was the intention of the program.
Exactly, that's my point.
Yeah.
So you need to encourage all those people to come to our program again.